Let's get more on this now with Osama Rizvi, Global Market and Product Strategist at Primary Vision. Welcome back to the programme, Osama. Firstly, how much will these captures, do you think, will impact oil?
Well, if we talk about Russian oil and gas revenues in particular, we know that only 30 to 40% of Russia's oil is carried through D7 tankers, whereas 65 to 70% is carried through what is called the shadow fleet. This means that Russia has more than 100 shadow fleets at their disposal. And if you look at the recent figures, they have only a marginal 2% decrease in oil revenue on a month-on-month basis. So I think it's doing pretty good, even despite the sanctions. And the price cap is already set at a higher price, and we have seen that oil prices have been lower. So overall, in terms of oil disruption or supply disruptions, I don't think that is going to make much of a difference.
Yes, and Russia has relied heavily on its so-called shadow fleet to keep its oil flowing despite sanctions. But new data shows that Russian oil exports to Asia are now falling. Is the shadow fleet finally failing to keep Russian oil exports afloat?
Well, on the paper, it may be, but fundamentally, we have seen that Chinese, for instance, one of the top three buyers of Russian oil, they increased their month-on-month imports of Russian oil by 23%. India, of course, has fallen a little bit, dropped to third point, but Turkey, which was at third, has now taken up the first point. So I think it continues to shift slightly. When we look at the data, the previous year data or the recent month data in terms of oil exports fluctuation, there is only a standard deviation of about 6, 7%. I think that's not much of it. Maybe if these sanctions are continued, then we will see a big impact. But for now, the shadow fleet also continues to grow, 1,290 something vessels. They are aging, so that will be a factor that need to follow. But otherwise, things are pretty much as they were.
Right, and oil prices jumped 3% on Friday before settling back. What has been behind this momentum?
Well, a continued realization of geopolitical uncertainty. We don't know what is going to happen in Iran. Venezuelan issue is still there. So I think traders and hedge funds are basically accumulating long positions because of the fact that they are anticipating some unrest, unfortunately, in the Middle East or otherwise in the world. But I think this can also fizzle out, evaporate very quickly if there are no further indications of unrest or geopolitical upheaval.
And how much more volatility can we expect in the coming days?
A lot. I think wild swings are going to become a normal characteristic for the oil markets and even the gold or bullion markets as well in 2026. Much of it will depend what will happen regarding the current active geopolitical conflicts, Russia, Ukraine. If there is sort of a peace, I think we will see this volatility dying down. Unfortunately, it does not, look that this will happen. So I am expecting a lot of wild swings, both in oil prices and otherwise global stocks.
Osama Rizvi in Lahore, thank you very much for joining us.